2023 has been an absolutely amazing year for the stock market, with the S&P 500 up about 25% for the year. In fact, the stock market looks like it's about to break to new all-time highs, which is impressive given the state of the economy with high inflation, high interest rates, and ongoing wars in different parts of the world. That said, many of the stocks that I cover have rallied a lot in the last few months, reaching overbought levels. However, there's one popular growth stock that didn't participate in the rally, and instead, it's down nearly 20% in 2023 and trading near its all-time lows. And that stock is Sea Limited, ticker symbol SE. It's becoming increasingly difficult to find value in the stock market, and it got me wondering, can this stock outperform the market in 2024? Well, that is what I'll be covering in today's video. As always, if you're interested in reading the article version of this analysis, you can find my article in the description box below. And with that out of the way, let's talk about what Sea Limited do as a company. Founded in Singapore in 2009, Sea Limited has grown to become the leading consumer internet company in the world, more prominently in Southeast Asia. And basically, the company operates three core businesses: Garena, Shopee, and Sea Money. Garena is one of the largest online game developer and publisher, releasing some of the most successful mobile and PC games over the last decade, including Arena of Valor, Call of Duty Mobile, and of course Free Fire. Then there's Shopee, which is its e-commerce unit, which was launched in 2015 and is now one of the fastest growing and largest e-commerce marketplaces in Southeast Asia, Taiwan, and Brazil. And finally, Sea also offers digital financial services through Sea Money, which was launched in 2014 and is now one of the leading fintech companies in Southeast Asia. In essence, Sea Money offers mobile wallet services, payment processing, and other digital financial services that are integrated with Garena and Shopee, enabling consumers and merchants to transact seamlessly in one vertically integrated platform. So altogether, these three companies combined together make Sea Limited one of, if not, the most promising and fastest growing tech conglomerate in Southeast Asia. And after years of domination and innovation, Sea Limited has created itself strong competitive advantages over peers. First, the company has a strong brand moat. Garena's games, particularly Free Fire, have consistently ranked as the most downloaded mobile game in the world. As you can see, according to Sensor Tower, Garena Free Fire is the most downloaded game in the world in Q3, with nearly 60 million downloads, more than other games such as Roblox, Subway Surfers, and Candy Crush. Although Free Fire has fallen to second place in the last 30 days, being the number 2 mobile game in the world is still very impressive, and that speaks a lot about its brand. And we can see the same thing for Shopee as well, which is a top 5 most downloaded app in the shopping category worldwide. In Southeast Asia though, it's a totally different story. As you can see, in 2022, Shopee has the highest market share in each of the Southeast Asian countries that it operates in. It has a 56% market share in Thailand, 63% in Vietnam, 60% in the Philippines, 53% in Singapore, 78% in Malaysia, and 36% in Indonesia. So in Southeast Asia, Sea Limited has a higher market share than companies like Lazada, which is owned by Alibaba, Tokopedia, which is owned by Goto Group, and of course TikTok, which is owned by ByteDance. So again, in aggregate, Shopee has the largest market share in Southeast Asia with a 48% market share in 2022 and an estimated 46.5% market share in 2023. The year-over-year drop in market share that you see right here is likely due to TikTok Shop, which has been gaining popularity in the Southeast Asian region, as you can see right here. But whatever it is, a 40% plus market share in Southeast Asia clearly shows how strong the Shopee brand is. And with that kind of scale, Shopee enjoys powerful network effects moats as well. As of Q4, Garena has 544 million quarterly active users, which is about 7% of the world's population. Research also shows that Shopee had about 375 million users in 2022, with about 7 million active sellers currently. And in 2022, Sea Limited also reported 53 million quarterly active users for Sea Money, and it is still in its early stages of adoption. With all these users in the Sea platform, cross-selling new products or services should be easier as Sea continues to scale, innovate, and offer better experiences for its customers. The ecosystem will get bigger and tighter over time, leading to powerful network effects in the long run. Next, I believe each of Sea's core businesses is operating in a winner-takes-most environment with high barriers to entry. For example, the mobile gaming environment requires the most talented developers to launch blockbuster games. Garena's Free Fire is certainly a blockbuster game, and if people are spending more time playing Free Fire, that means time not playing other mobile games. In addition, just like how Amazon dominates in the US, the e-commerce landscape in Southeast Asia and Latin America is dominated by a few players, such as Shopee, Tokopedia, and Mercado Libre. The scale and unit economics that these players have achieved makes it unsustainable for new entrants to compete with them, which is why players like China's JD.com have exited key Southeast Asian markets because of how difficult it is to compete in the region. And lastly, banking and fintech is also a highly regulated environment. Furthermore, consumers want to use a trusted banking or mobile wallet provider to manage their money, and C-Money is a licensed provider with a strong brand, so that clearly plays well for the company. Okay, now that we've talked about the company and its competitive advantages, let's look at the company's financials, starting with growth. So here's a chart of Sea's total revenue as a group. In Q3, total revenue was $3.3 billion, up by only 5% year over year, which beat analyst estimates by $90 million or 3%. But that's not the important part. The important part is that growth has slowed down significantly over the last few quarters, down from the triple-digit growth that we've seen in 2020 and 2021 to just mid-single-digit growth as of recently. It's just safe to say that years of growth have been pulled forward due to the pandemic, which forced many people to spend their time shopping online and playing video games. But as the economy reopens in 2022 and 2023, people spend less time online, which consequently led to a steep drop in online activity and thus a steep deceleration in growth. So with that in mind, the slowdown in growth does look concerning, which is why the stock has been performing so poorly. But breaking it down by segment, Q3 Garena revenue was $592 million, which is down 34% year over year. As you can see, growth flipped from positive triple digits to negative double digits, which is not very good to look at. And the drop in revenue was due to the moderation of user engagement, lower monetization rates, as well as Free Fire being banned in India starting in early 2022. The good news is that the gaming division is seeing some recovery with revenue up 12% quarter over quarter, so hopefully this trend continues with the company eventually returning to positive growth soon. As mentioned earlier, Garena's revenue has been on a decline due to lower user engagement, and to give you a better visual of what that looks like, here's a table of Garena's number of quarterly users. As you can see, quarterly active users or QAUs were down from its peak of 729 million in Q3 of 2021 to just 544 million in the latest quarter, which is about a 180 million drop in the number of Garena users. More importantly, quarterly paying users or QPUs were down from its peak of 93 million to just 41 million in the latest quarter, and the more concerning thing is that QPUs decreased by 21% year over year, which is more than the 4% decline for QAUs. This meant lower monetization rates as seen from the drop in paying user ratio from as high as 12.8% to just 7.4% in Q3, which consequently led to lower revenue. So as it relates to Garena, I believe QPUs is the most important metric to track. We saw a decent recovery in the metric in Q2, but it dipped again in Q3. But on a positive note, QPUs remain higher than the Q1 lows of 38 million, so hopefully that is indeed the low and that Garena continues to add more QPUs in the following quarters. And that way, Garena can return to growth mode after nearly 2 years of decline. But moving on, Q3 Shopee revenue grew 16% year over year to 2.2 billion, and although growth is slowing down, which is reasonable as the company grows over a much larger base, Q3 revenue actually reached an all-time high for Shopee, so that's great to see. That said, growth was due to higher gross merchandise volume and gross orders processed through the platform as well as higher monetization rates. In Q3, GMV grew by 5% to $20.1 billion and gross orders grew by 13% year-over-year to $2.2 billion, which happens to be at record highs for both metrics. As mentioned earlier, higher monetization rates also drove strong growth for Shopee. Here you can see the company's take rate, which is basically revenue as a percentage of gross merchandise volume. But do note that take rates in Q1 and Q2 are left blank as Shopee did not disclose GMV numbers in both periods. That said, a higher take rate means that Shopee is more effective in terms of monetizing its users, and fortunately, that is the case for Shopee as take rates continue to improve. As you can see, Q3 take rate was about 11.1%, which is about 100 basis points higher year-over-year. However, that figure is not as high as Q4's 11.7%, which could possibly mean lower fees for sellers or higher discounts for buyers in an attempt to stimulate stronger growth. Regardless, it's still great to see that Shopee's monetization rate is getting better over time. Moving on, SeaMoney continues to grow faster than the overall company. In Q3, SeaMoney revenue was $446 million, up by 37% year-over-year, which is a record high for the company as you can see right here. This was mainly due to its growing credit business, with its total credit portfolio expanding by 5% quarter-over-quarter to $2.9 billion. So not much to talk about here, but SeaMoney continues to execute and grow, which is great to see. So all in all, Shopee and SeaMoney continues to grow rapidly, while Garena is in a decline due to lower number of users and monetization rates. So because of Garena, the growth profile of Sea Limited as a whole does not look impressive at all, which led to a lot of investors concluding that the growth story of Sea Limited might just be over. However, I believe that Sea Limited could return to strong growth in 2024 due to relatively easier year-over-year comps, continued momentum in SeaMoney, as well as the relaunch of Free Fire in India recently. With that being said, while growth has been slowing down, profitability, on the other hand, is trending in the right direction. In Q3, gross profit was $1.4 billion, up by 17% year-over-year despite revenue growing by only 5% year-over-year. As a result, gross margin expanded by 500 basis points to 44% in Q3, mainly driven by improved monetization and greater cost efficiencies in Shopee and SeaMoney. But notice that gross margin has been trending down over the last few quarters, and this is due to lower Garena revenue, which I explained earlier, which has the highest gross margin profile among the three businesses. So if Garena recovers, we should see material improvement in the company's gross margin profile, possibly as high as 50% plus. Regardless, gross margin still improved from last year and the long-term trend is still up, and that demonstrates economies of scale within the business. Moving down the income statement, Q3 operating profit was negative $128 million, which is a negative 4% margin. As you can see, operating margin turned negative again after 3 consecutive quarters of operating profitability. So previously, C has been operating at huge losses, but the company has been focusing on optimizing operating expenses and achieving higher cost efficiencies, which is why the company turned profitable recently. However, Sea Limited turned unprofitable once again in Q3, mainly due to higher sales and marketing expenses, which grew 12% year-over-year or 86% quarter-over-quarter to $918 million. And not surprisingly, over 90% of it was allocated to Shopee, which saw sales and marketing expenses rising by 50% year-over-year to $862 million. So here you can see operating profit by segment, and as you can see, Garena has the strongest margin profile among the three businesses, producing $346 million of operating profit at a 58% operating margin in Q3. On the other hand, the e-commerce segment turned unprofitable once again, burning $428 million in Q3, representing an operating margin of negative 19%. It's still an improvement from last year's negative 31% operating margin, but it is definitely a big dive from Q2's operating margin of 3%. And finally, C Money is showing the strongest operating leverage with an operating profit of 150 million in Q3, representing an operating margin of 34%, which is a major improvement from last year's negative 25% operating margin. So despite the huge losses from the e-commerce segment, it is well covered by the other two higher margin segments, which continues to see operating margins improving year over year and quarter over quarter. That's it. With improved profitability in Garena and C Money, management is turning more aggressive in terms of capturing market share for Shopee, which is what they've done in Q3. A few years ago, this strategy would have been unsustainable, but today, C Limited is self-sufficient enough to incur heavy losses from its e-commerce unit. On the bright side, Shopee Brazil is on the verge of profitability, with contribution margin loss per order improving 91% year over year to 10 cents in Q3. And eventually, this should put less burden on Shopee's operating profitability. Finally, Q3 net income was negative 144 million, which is a negative 4% margin, and as you can see, net margin turned negative in Q3, again due to elevated marketing and sales expenses. And I expect this to continue as Q4 marks the holiday season, so don't be surprised if net margins remain negative. All in all, C Limited should return to GAAP net income profitability as the company scales further, which should happen sometime in 2024. Previously, C Limited operates a growth at all cost strategy, spending uncontrollably in pursuit of upsized growth. However, the company has pivoted to a strategy that balances growth and profitability, which led to margin expansion over the last few quarters. That said, profitability did turn negative in Q3, but fortunately, this was intentional. C Limited, being in a fundamentally stronger position, is now ready to ramp up spending once again in order to stimulate growth, capture additional market share, as well as defend its leadership position. As you can see in this chart, C Limited has spent a considerable amount of money to turn internet users into internet consumers, which drove GMV growth through its platform. And today, the company is in stage 4, which is monetizing its users or customers. And as I have discussed earlier, Shopee's monetization rate has been improving, and over time, the company will turn profitable once again. That, I believe, is management's plan, and that should drive long-term shareholder value. This is part 1 of a 2-part video. If you like this video, I'm sure you will like the second part of the analysis, where I'll talk more about C Limited's valuation, what I think about the stock moving forward, and whether I have a position in C Limited or not. So if you're interested, don't forget to subscribe and turn on the notification bell so you won't miss the second part of the analysis. And with that said, thank you guys so much for watching this video. I appreciate you and I hope you have an amazing day. See you guys on the next one.